also very excited to bring up our next speaker, and he flew in from beautiful SoCal to be with us today. He's been long-term executive at Countrywide Financial, which went on to become the largest mortgage loan originator in the U.S., acquired by Bank of America. He's a serial entrepreneur. He has successful exits under his belt. He chairs the capital markets or financial services special interest group, specifically for mortgages. He currently runs an organization called Z-Ventures Blockchain. It's a global services and consulting organization that specializes in blockchain, and also working on some really cool ventures. Without further ado, we'd love to welcome Marvin Bantugan, who's going to talk about some landmark use cases in financial services and in capital markets. So let's bring it up for Marvin Bantugan.
Thank you. I really like that panel that we just went through. I want to go through just some quotes that I wrote down, and then I'll do my favorite quote at the end of that. Zane said, they don't care if you're on blockchain. That's true. People don't care if you're on blockchain. They could care less. Jack from Scale said, it's in the implementation. Absolutely agree, okay? Okay. People really don't want to see me, but at least that's what my kids tell me. Jack from Scale said, it's all in the implementation. Again, something I wholeheartedly agree with. And then the last one that's my personal favorite, there's nothing that can make Ethereum run faster. Okay, for those of you that have been in blockchain, I mean, you know. Okay, so let's just go ahead and get right into the presentation. I'm going to be speaking about some of the landmark use cases in tokenization and capital markets, and provide some of my thoughts, which may not be welcome, on tokenization and capital markets, but we're just going to go with it. I heard thumping. Awesome, thank you. Let's see if it'll. Okay. I always love this part when it's the technical people that have the technical problems. I'm trying to go back because I was just testing. Yeah, there we go. Okay. Just as another quick aside, this morning I did a conference call where we were talking to a potential business partner. I was sitting on the floor of baggage claim in Oakland. So, I mean, this venue is a fantastic change. Okay. This is just the agenda. I'm not going to go over that at all. Faster, cheaper, easier. I'm trying to trademark that phrase, so back off, everyone. And let's just do there we go. Okay. I'm not going to spend a whole lot of time on this. I am the CTO of Z-Ventures. We're a global fintech solutions provider, leading provider of consulting services, strategic staffing, and technology solutions. Our industry focus includes financial services with an emphasis on mortgage and real estate, and we have a growing healthcare practice. Those of you that know mortgage realize that, yeah, you need something counter-cyclical to mortgage, and that's healthcare. So I'm also a member of the Hyperledger Foundation, so I think Hart Montgomery was here. I am a big proponent of Hyperledger. I think it's a fantastic blockchain. I am the co-chair for and this is always a mouthful, Hyperledger Foundation Financial Markets Mortgage Subgroup. We have monthly meetings the second Thursday of every month, and I'll have a slide on that as well. I encourage you guys to attend. I am a frequent speaker on blockchain, tokenization, and I spoke at the IEEE 2022 Global Emerging Technology Conference and Fabric Symposium. I've spoken at the 2022-2023 Ideas, AI, and Blockchain Conference, and even I am getting bored with all of this. So I'm going to move on. Okay, everyone here knows about blockchain. I'm not going to try and educate people that probably know about more about blockchain and tokenization than I do. The only thing I want to mention on this slide is what Larry Fink said. The next generation for markets, the next generation for securities will be tokenization of securities. This is a huge opportunity, and that's why we're all here. Okay, faster, easier, cheaper. What do I mean by all of this? Like a lot of people in this room, I've been attending a lot of conferences on blockchain. I got to move this on blockchain, tokenization, and AI. It was at the 2024 Van Eck Southern California Blockchain Summit at USC a couple weeks ago that I had an aha moment. A very successful venture capitalist, someone that's made a lot of money, and I haven't made a lot of money. That's why I'm here speaking to you guys. He told the audience that to build a successful application, to get over 1 million users, and it doesn't have to be 1 million users, a critical mass of users, your app has to be 3 things. It's got to be faster, it's got to be cheaper, and it's got to be easier than anything in the marketplace. Okay, if it doesn't meet that criteria, you're wasting your time. Your company's not going to be successful. Okay, unfortunately, very few of us, and this is the brick wall of reality, very few of us, including me, are building solutions that are faster, easier, and cheaper. So let's continue on from that. Well, there we go. Okay. TikTok, Spotify, ChatGPT, and SpaceX. These are all archetypes of faster, easier, and cheaper. TikTok is the 6th most widely used social network, and it has redefined short-form video. More than 1 billion videos are viewed daily. When I got that data point, I nearly had a heart attack. 1 billion videos, and I spend hours on TikTok, so it's not just me, okay? And it has been downloaded more than 700 million times in the first quarter of 2023. Spotify streaming has supplanted DVDs, radio, and iTunes, and it's so ubiquitous, even my parents use it, okay? Another example, ChatGPT. It has added AI to the everyday lexicon, for better or for worse, and it has made AI approachable to everyone, and versions of it are still free. SpaceX has replaced expendable rockets, and it has made rocket launches several orders of magnitude cheaper and spaceflight easier than any other rocket company. It'll take us to the moon, Mars, and beyond. So these are all examples of, to use an overused term, disruptive solutions. When Tanvir and I started talking about the topic of my presentation today, landmark use cases of tokenization, I thought that there would be no similarly disruptive solutions, tokenization blockchain applications. And I think that's true. And if someone's hiding something, I mean, please let me know. However, there are a myriad of use cases in capital markets that do stand out. So let's go through a couple of those. And this is by no means going to be exhaustive. And in fact, it'll just be a very, very light brush because of the limited time. The first case that I want to go through there we go. Liquid mortgage, in concert with Redwood Trust, had demonstrated the benefits of tokenization mortgage-backed securities and wrote about their effort in what I think is a seminal white paper, Building a Mortgage Blockchain Ecosystem. This white paper referenced issuance SMT 2022-4, so you guys should be writing that down, consisting of 338 loans and an approximate principal value of 294 million as of December 20th. Each loan that underpinned that securitization is a digital asset sitting in a wallet. So as a user repays the loan principal, the balance in the wallet reduces in line with the loan balance and reflected in the Stellar blockchain. So this allowed investors to view payment activity on a daily basis. Um, so this is clearly an example of a blockchain application that resulted in faster processing. They also had another securitization, SMT 20-21, 20-21-6, had an initial notional value of 449 million, backed by 497 jumbo loans that also experienced the same type of improvement in processing time. So awesome use case for faster processing. Another example that I'm not going to go into as much detail, Vanguard. Vanguard leveraging R3's Corda through Grow Inc. achieved straight-through processing savings of 100 hours in a week of labor. Now let's go over tokenization use cases that are cheaper. Hey, there we go. Ooh, I have some extra bullets there. Okay. Goldman Sachs digital asset platform achieved 15 basis points in savings for 100 million euro digital bond issuance. In April 2021, Goldman Sachs led the first issuance on the Ethereum public blockchain for EIB, European Investment Bank, for 100 million euro. So some of the key things to note about this issuance was awarded a AAA rating by both Moody's and Fitch. When this issuance took place, it pushed Ethereum prices up to a record highs and a total market cap of over 312 billion for Ethereum. So this is something that definitely had a market impact. The initial investors in this issuance were AXAIM and Union Investment. A couple other firsts for this transaction. This was the first public digital issuance on the Ethereum public blockchain. It was also the first cross-chain delivery versus payment settlement using experimental CBDC token, as well as the first digital bond to be executed under Luxembourg law. And then an example of faster as well, it had T+1 settlement versus a traditional T+3 settlement. So that's something that really caught my eye. So this use case, a perfect example of not only cheaper, but faster as well. The other item on this slide, JP Morgan's Onyx Digital Assets is projected 20 million in savings. Yeah, there it is. Those things got merged. Is projecting 20 million in savings on an expected $1 trillion in tokenized repo volume by the end of 2023. We've got some more use cases. I'm not going to go over a lot of these other use cases. I'm just going to go over one or two of them really briefly. Broadbridge's digital ledger repo DLR is saving sell-side clients like Societe Generale $1 million per 100 euro, or excuse me, per 100 repo transactions. And then the last one I want to cover, structured finance servicing platform Intane. I'm familiar with Intane. I think they have great technology. They're a great bunch of guys. 100 basis points in savings by reducing SME, small to medium enterprise loan life cycle fees from 150 basis points to 50 basis points through Hyperledger, plug for those guys, and Avalanche blockchain solutions. So in another study that I don't have a slide on, but I wanted to reference, cost disruption in the issuance market by CashLink and Finoa. The authors compared the associated costs of a traditional securitization versus tokenization, where the latter showed cost savings of 35 to 65% across a security value chain. So 35 to 65% savings. And that value chain included the following steps pre-issuance. So this is the legal and transaction structuring. There weren't that many cost savings. We'll just call it a 0% on pre-issuance. Primary market savings, 14% to 68% cost savings. That's pretty significant. Custody and asset servicing, 33 to 64%, and then secondary marketing, 17 to 50%. So just across those examples, tokenization can definitely be cheaper. And as in some of the use cases that we've just discussed, it is sometimes faster. But here's the rub. Is tokenization easier? Unfortunately, tokenization, rather than simplifying the process, can add additional complexity and obstacles. These obstacles include the items that are on the screen: technological complexity. To use blockchain effectively, there has to be a significant level of technical understanding within the enterprise, which could pose a problem for in my size clients that are small to mid-size financial services companies. Oftentimes, they're not going to have an IT team that has the sophistication or the technical expertise to be able to manage a blockchain project. Another issue is regulatory opaqueness. While tokenization has a slew of benefits, it represents a lot of complex legal challenges. Securities law can differ across jurisdictions, and failing to comply can result in severe penalties. And you have to have your KYC and AML, so know your customer, anti-money laundering regulations that you have to follow pretty closely. That adds another layer of complexity. And even more important, I think, is that the lack of regulatory clarity around blockchain and tokenization. And there's a sizable population, me included, that feels like this lack of regulatory clarity is one of the biggest things holding back tokenization and its widespread usage. Some of the other items that are covered on here: interoperability and standardization. Adapting tokenization is not merely about implementing new software. It demands a fundamental shift in trading infrastructure, legacy systems that often have to struggle with integrating with the blockchain. That was one of the issues mentioned by the previous panel. And then one of the things that people tend to not fully address is it's going to require significant investment in time and capital because of the requirement to run parallel. So if you set up a blockchain or tokenization process and really to make sure that that thing is working, you've got to be running parallel at some time, unless you have the balls to just flip the switch, okay? Cybersecurity, I'm not going to go into a whole lot of that, but that continues to be an issue. While the blockchain itself is secure, elements of the ecosystem can be vulnerable to hacking, and you need to implement robust cybersecurity measures. Volatility, it's not on here, but it's one of the things that's embedded to some people. Volatility is not a bad thing. I mean, market volatility can provide lucrative trading opportunities, but it also amplifies risks. So those are some of the things that I think are holding back tokenization. And just kind of to bring all of this home, there currently exists, at least in my opinion, no solution at scale that spans different banks and different blockchains. Whoa. Yeah, that's where I want to be. Okay. Despite the progress that's been made, tokenized deposits currently operate only within a single bank or within a single blockchain. Stablecoins lack the regulatory clarity to be considered bearer assets to provide for real-time ubiquitous settlement. In addition, the tokenization provider landscape has been fragmented, and it's still growing. There's no integrated or established one-stop shop solution for tokenization. And I think that that provides a real opportunity for the people in this room. In if you can sell faster, cheaper, easier to a customer and get them onto a tokenizer blockchain network, I think there's going to be a lot of customers that are out there. The third remaining issue is the absence of at-scale distribution channels for digital assets to be accessed by appropriate investors. I think that's CompuSpeak for a common marketplace. Many tokenized assets are available only on homegrown platforms from tokenization providers, and it's fairly narrow population of traders. There needs to be integration of these platforms and blockchains and networks. So just to wrap all of this up, it may sound like I'm arguing against tokenization. That is not the case. I sincerely believe in tokenization and that it can provide value and that it is the future of capital markets. The use cases that we've been discussing clearly demonstrate the benefits of tokenization. What I'm advocating for by bringing these weaknesses to the forefront is building partnerships that expand distribution, okay? Focusing on interoperability. That's been spoken by a myriad of people. Interoperability, integrating with legacy systems, and the last one, regulatory clarity. This will allow us to develop solutions that are faster, cheaper, and easier. So I never know where I'm at on these slides now. Okay, that's the slide I was supposed to be at. I'm just going to throw the Hyperledger slide out here if you guys want to join or sit in on our meeting tomorrow. And then I want to open it up to questions. Yes. That is outside my field of expertise, but I never miss an opportunity to talk about something I know nothing about. I think that's fantastic, okay? More power to the people that are tokenizing carbon credits. Personally, I'm trying to have as big a carbon footprint as possible, but my kids are trying to prevent that. So yeah, I think that that's great. How that's going to be done is the question that I have. And are the people that are going to be providing those services, is there a business case behind it? If that's something that you're interested in my question to you would be, great, that's great for the environment. I think a lot of people support it. How are you going to make money at it?
The Guardian article from Vera last year showed that 90%. So Vera is like the Google of carbon offset issuer, and 90% are fake. So we have $1 trillion market. We have 90% that are fake. That provides huge opportunity, at least in my mind. And there's a protocol called Toucan protocol.
Yep.
And so what that does is takes real world assets of carbon credits and issues it on chain and provides liquidity, but they provide no standardization or filtering because they just want more credits, the better. So that's increasing zombie credits.
Mm-hmm.
So it's a very much a wild west within that market. So whenever there's FUD, right, that's a good time to jump in.
Mm-hmm.
When your mom is texting you about Bitcoin, that's probably not the right time to buy. So it's a similar concept.
Yeah. I mean, clearly you know more about this topic than I do. And I think that, as I said, I think it's a great idea. I think it's a great field to be into. I just honestly don't know enough about it.
What about tokenizing weather data to potentially help to reduce cost of insurance or real estate? Awesome. Thank you.
He just wants to keep throwing questions at me where I don't know what the fuck I'm talking about. Gentleman over there has a question. Yeah, ask me something else about something I don't know.
Thank you. So my name's Trevor. This is really exciting to see RWA in San Francisco. I started a project called Polymath in 2018, which is like tokenizing on Ethereum. And one thing that we evolved to was actually building our own L1 that's kind of purpose built for
Yeah.
RWA, because we tried to talk to banks, we tried to get them to use the protocol or our application, excuse me. And they were like, yeah, well, what happens if we have to unwind a transaction? What
Yeah.
happens if someone's on the OFAC list? What if you saw cases where people would spam the BlackRock wallet with porn and contaminate it because you can't prevent that from happening?
Right.
So my question is like, do you have any thoughts on kind of at the L1 level where it's moving? Should it be public and permissionless like Ethereum, or maybe private and permissioned like what we've been working on? And secondly, do you see the value in RWA accruing to the L1 layer, or do you think it's going to happen on top at the application layer, if that makes sense?
Yeah, it does. I keep trying to walk that way. I have a personal bias against Ethereum. I did my first blockchain work doing proof of concepts on Ethereum, and it took us 3 or 4 months to get our blockchain up and running on Ethereum. The transactions per second were unbelievably painful on Ethereum. So I guess part of my answer to your question is I don't think Ethereum is a good vehicle for that type of application. But that said, you may be a heck of a lot smarter than I am. When I jumped in, another shameless plug for Hyperledger, we did our proof of concept before on Hyperledger using Hyperledger Firefly. We get our blockchain up and running in a week, something that we'd been banging our heads on for like 3 or 4 months before. We got done in a week.
Because Hyperledger is a permissionless chain, right?
Yes.
And it kind of has to be.
Yep.
Because that's what we realized too. And the way we keep it we kept it public. I'd like your thoughts on this, but all of the nodes on the network have to be regulated.
Yes.
And everyone on the chain has to be KYC'd.
Yes.
Because if you don't do that, you're in violation of literally everything. So
Yeah, and we were working on banking applications, specifically a mortgage origination application. So that's why those security measures, what actually facilitated what we wanted to do in terms of building a mortgage application proof of concept.
like a figure, sort of.
Well, yeah, the real answer is yes. They're the 800-pound gorilla in my industry. The figure, Michael Cagney, the whole crew.
Noted.
We can talk later.
Anyone else?
Okay. Question in the back. I'm just jealous of Figure. That's why. Okay. Yeah.
Quick question. On the regulatory clarity piece, I'm curious your opinion on who's best suited to provide that clarity. Is it the SEC, CFTC, or is it some organization that doesn't exist today?
Excellent question. I think, unfortunately, the real answer is going to be defined by the next election. Okay. If we have a certain candidate that has stated his support for blockchain and crypto, I think the organizational body is not going to be that critical because he will just issue an executive order. But then you have to take the bad with the good on that. So in how much do you really love blockchain? Okay. So I guess I showed my political affiliation in that last comment. We can delete that out later. Okay. There was another question, or are we out of time? Okay, I'll take it in the break. Thank you, everyone.